To the floor show on this Friday ahead of the holiday weekend. Tom, I wouldn't ignore the Hong Kong situation, certainly. You know, this afternoon, the UK, Australia and Canada issued a joint statement. I have it right here, saying that China will be in violation of the joint declaration that had been signed years ago by China and the UK that had granted Hong Kong some really strong autonomy. Will that turn up the heat on these markets if China presses its very hard thumb down? What do you think, Tom?
Well, very well it could, Liz. You've got the rhetoric really elevating between the Trump administration and China with regard to coronavirus culpability, now the power grab in Hong Kong, and issues like that. So I think moving forward, as we look at U.S. markets, in order for us to sustain these levels and maybe even push higher with the wall of worry, we're going to see a rotation into cyclicals. And this is very, very common after 2 quarters of negative GDP growth. Historically, we see a rotation into these type of stocks. Right now, the top 5 stocks of the S&P 500 make up 25% of that weight. So we need to see a broadening participation. I think we're going to see that in banks.
Very true.
I think we're going to see that in defense stocks. And that's why what you brought up, Liz, is so appropriate right now, because I think just the increasing rhetoric between the Trump administration and China, although I don't see it going into another trade war or into a Cold War, I think it's enough to bring attention to the valuation of these defense stocks. Did you know this sector was down peak to trough 60% during the great financial crisis? This cycle, it was down 55%. So with the market up so much off the lows, there's still some really embedded value in this sector. Banks, home builders, and energy, which we let Phil talk about that.
Well, you know, we just showed what some of the biggest names in the sector have done, Phil, up 33% or so for Lockheed Martin and some of these other names. But what do you think will be the catalyst? And there could be a good catalyst and then a bad catalyst, right, Phil?
It is. We're getting mixed signals out of everything. I mean, just take China, for example, overnight. On one hand, we had signs from China that, hey, we're on track. We're going to meet our obligations when it comes to the U.S. trade agreement. That should have been a big positive for the market. But then on the other hand, you have the situation in Hong Kong that is a big issue, right? And this has been boiling for some time. And it's interesting enough, though, a lot of people say this is a U.S. Trump situation with Hong Kong, but it's not. As you mentioned in the beginning, this is a worldwide concern, and if China, of course, really cracks down on Hong Kong, I think the entire world is going to have issues with China. Having said that, I think the stock market is recovering because of what? We're seeing a great recovery in the economy. It's starting to open up a little bit. We have stimulus coming from the Fed. We have stimulus coming from Congress, a potential another deal down the road, probably not the one that they have on the table. I hope not anyway, but another deal coming. Listen, they've got the back of companies. They're reducing regulations. Every time that's happened, Liz, it's been very bullish for stocks. So you can't underestimate this. Are there going to be headwinds, problems? Probably. But any hard break, I'd be a buyer.
Warren Buffett said 2 weekends ago, don't count out America. Don't bet against America. Phil, Tom.